Welcome back to Fundraising 101, where I'm going to teach you how to raise venture funding like a pro. This course is about 6 sections. Last time we talked about getting started. Today's all about creating a competitive process. Then we're going to move on to finalizing materials, going to market, term sheet negotiations, and then closing the round. Specifically today, we're going to talk about participant power dynamics, building a network, identifying the universe, and talking to VCs. We got a lot to cover. So a bit about my background. Again, I've been in B2B SaaS for about 13 years across all kinds of different departments. I've led companies from inception through rapid growth, acquisitions, downturns, and everything in between. But more specifically, I've raised over $200 million from some of the best funds in the entire world. So I'm here to talk about that and teach you how to do it. Let's do a brief recap of what we talked about last time. I introduced this concept of a $10 million investment is the same thing as a $10 million sales deal. I see this all the time where founders will go around looking for an investment with 25 slides and a handout. It's not strategic, it's not thoughtful. But if you think about it, what would you do if you needed to close a $10 million sales deal? People come up with all kinds of stuff that you would need to do across all the different participants, the thousands of interactions, just the preparation and execution needs to be flawless to do something like that. It's the same. So please think about that when you're going to market. It'll really help you frame how you should be thinking about things. So the other important thing we introduced was controlling the power dynamic. Founders are inherently at a disadvantage when they're raising capital, but they can change that by controlling the timeline, the participants, and the information. If you do all three effectively, you can create a competitive process and deal heat. We talked about calendaring and multi-tracking. The timeline is the most important power dynamic. And I gave this resource where you can back in from when you're trying to close a round, ideally around your cash out date, and then work backwards from all the different things you need to do to be able to go from identifying the universe, which we're going to be talking about today, through cash collection. So be sure to use that resource when you're thinking about going to market. And then we talked about getting organized. So what do you need to do around workflows, team, tools, networking to have a really efficient fundraising process. If you didn't watch it, go watch it. It's a 30-minute video, so there's a lot of information in there you need to build upon to be able to understand this video and use it effectively. All right, so let's talk about creating a competitive process. A successful fundraise is competitive. We talked about this last time. If there's no deal heat, if you don't have multiple people giving you term sheets at the same time, you're not going to have any leverage to be able to get favorable terms, a positive valuation, or even close the round. So you need deal heat to be able to close the round. And to get that, it needs to be competitive. So let's talk about controlling the power dynamics, the participants. Who are the participants? Participants are those who you allow into the process. These can be VCs, angels, subject matter experts, your network, advisors, friends, family, whoever you invite into the process are the participants. This section is really defined by networking, researching, and networking. We're going to keep coming back to this. So how do you build a network? If I were you, starting cold, and you don't have an existing network, I would strongly advise you to start going to events, in real life functions, and meeting other people that are the same stage as you or maybe one stage before. You're going to really need to rely on other founders, subject matter experts, operators, people that work in startups. You're going to have to do some cold outreach. I would strongly suggest building your presence online on X, LinkedIn, Twitter, Discord, wherever it might be. Find peer groups of people at the same stage as you. Start to work on getting advisors or help from other people, which we'll talk about later. Consider joining an accelerator like YC or one of the many that are out there. Make sure you're utilizing current investors if you have them, and then customers are part of your network as well. So I would focus on all of these buckets as your who and your how to start building a network if you don't have one already. What were you going to be doing when we're networking aside from just meeting people? You're going to be utilizing this time to do deck reviews, data room reviews. You're going to be understanding benchmarking. So where were they at and what metrics were they achieving when they closed a round and at what valuation. You're going to be trying to understand the landscape of venture capital at that time. It changes quickly. So who are the players? Where are they at? What tier are they? What are their personalities? You're going to be looking for validation. You're going to be looking for emotional support, and you're going to looking to understand random shit. All of this stuff is super important when you're fundraising. It's exhausting. It's tiresome. You get a lot of no's. It's an emotional roller coaster. So you need a support network. And then lastly, you're going to need to add value, follow up, keep them up to date with what's going on, and then try to flywheel it. So when you meet with other founders, subject matter experts, advisors, whatever it might be, find ways to be helpful to them. You're going to be needing them and asking them for advice. So try to get them a customer, try to help them close a hire that they really need. Do anything you can to add value so they want to keep talking to you. And then once you do, try to flywheel. So who else can you introduce me to who's also recently closed around or recently raised? Hopefully they'll be able to connect you and continue to do that as you go through this process. One other note, consider incentivizing support. So converting these networking events into investors or advisors. Once they're incentivized, the likelihood of them bringing more people to the table goes up. And it also helps with your round composition, which I'll go more into detail at a later point in this course. But if somebody is incentivized, say you had a great conversation with a different founder who was unbelievably helpful, you want to continue to work with them, and also you want to incentivize them, consider giving them an advisory agreement or allowing them to invest, giving them some shares in the company. And then they're going to be more likely to help you throughout this process. And also, as you're networking, talking to a lot of people, if nobody wants to invest, it's also a signal your company might not be investable, or you might not be at that stage where you're ready for investors yet. So something to consider. Okay, and then why are you doing all this networking? It's to activate them. We're going to talk later in this specific module about activating your network, but this is where they become really valuable, activating them when you need them active within your fundraise process. Always keep them warm. Don't talk to somebody and then 3 months later, hey, can you introduce me to someone? Keep them up to date on what's going on. Okay, so here's an example. You know Sarah, you met Sarah at a networking event or a founders event. She recently closed a Series B from GGV for her B2B SaaS company. You're also looking to close a Series B for your B2B SaaS company. So very relevant information you can gather from Sarah. So when you meet with her, you're going to be asking questions about which firms did they talk to, which partners specifically, who did they get close with, can you see their deck, what was in your data room, what went great, what didn't, how long did the process take, why did you go with that firm, where were your metrics at the time, and what valuation did you get, how would you go about it differently, who turned you down and why, right? So this might be several conversations. Again, why you need to add value so they keep talking to you. But you can get so much signal before going to market just by talking to other people who have recently raised. So you need them and you need this information to be effective. Okay, that was networking. Let's talk about identifying the universe. Identifying the universe is a concept that I like to utilize in terms of understanding every single firm who can write you a check based on your industry focus, the type of fund, the stage and size, and then removing conflicts. So you want to find everyone and anyone that would conceivably write you the check that you need to close the round, right? And then one point I probably won't come back to it is conflicts. Write down who all your competitors are, work backwards and find out who their investors are, and just remove them from any of your lists. They're not going to invest. They're not going to go against their current investment. So save your time on those ones. Okay, the importance of the right firm and the right partner. Do not waste time talking to every VC that will talk to you. Especially associates, it's their job to take meetings and gather data points. And a lot of people, just being honest, cosplay as VCs. They don't actually write checks. They maybe wrote one angel investment 10 years ago and they put VC in their byline. There's a lot of noise out there. So you got to get specific about who you want to talk to, why, and then understand how to get into those types of conversations. So how do you ID the right firm? First, again, what stage are you at and what are you raising? What's the check size? What's the vertical and industry? And then there's tools like Crunchbase, PitchBook, Google, X. There's a million different places you can go to find information about VCs. So for example, on Crunchbase, you can say, hey, I'm raising a Series B. And in the past year, who has closed a Series B? I'll give you a list of companies, and then you want to go over to who were the lead investors, and then who were the other investors, the secondary investors. I would go through this. I would have, again, your team, your EA, your chief of staff. Maybe you hire someone offshore to go and aggregate all of this data for you. And again, this is what you're going to be validating as you're networking, right? So this is a part of the research phase. This will get you to a stage where you have a really strong list of like who's actively writing checks right now and to what types of companies. And then you have to ID the right partner, right? So the right partner means they have power to write a check. They have a background expertise in what you do. They maybe have a thesis on the space. They've backed maybe some of your customers, and they're actively investing. A lot of people in these large-scale VCs aren't actively investing, don't actually have power to write checks, right? So Lightspeed Venture Partners, this is just an example. It's actually not a great example because they do a really great job of laying out their website for you, but most don't. So just give you an example of how I would go about this. I've identified Lightspeed as a firm that's currently writing checks, and now they've got all these investing partners in my segment, and I would just go one by one and look at their profile. So Alex, let's look at Alex real quick. Most of these will show their portfolio, so you can understand what businesses has Alex invested in. And I see he's just got one listed here. There might be more. Bluebirds. I don't know what Bluebirds is. I go in here and I check it out. And I review their website, and this has nothing to do with what my business does. Okay, so maybe Alex isn't the best partner for us to start with. Let's check out Adrian. And Adrian has a bunch of investments, and he has some really good ones too. So this probably signifies he has some power, because ClickUp, Wiz are great companies. And so that means he's probably got a lot of confidence, and people rely on him and listen to him when he's trying to write checks. And then I see ClickUp. Great. My business is like ClickUp, but for a different segment that's not competitive, right? So that means Adrian will likely understand your business. So you've already gotten to a point where you're already at step one of them understanding your business and thinking it's valuable if they have an ancillary interesting investment that you can connect to, okay? And then lastly, just don't get stuck with the wrong partner. You want to make sure you're talking to the right person. I've seen partners that were the wrong partner attempt to block the right partner when they come into the conversation. So just always try to start with the right person if you can, and then don't get stuck with associates or junior level people. They just can't write checks, so there's not really a point in wasting anyone's time. And then from here, here's another resource I'm providing. You're going to create a target list. Don't use this information that's in here right now. It's not correct at all. But you're going to look at what stage you're trying to get a check size in. Then you're going to list every firm that you've found. Again, this should be like 75, 100, 150. What stage they're at. When was the last time they wrote a Series B check at your round, right? Or whatever round, Series B, C, D, just making sure they're writing checks at that round. What type of VC are they? Then you're going to work backwards again. Who is the target partner? From there, this is where that networking starts to really become powerful. When you're talking to other founders, hey, you talk to Iconic, is this the right partner? And they'll say, yes, Yunky is the right partner. Will might also be a great partner. And so you kind of just work backwards. Or, hey, this person's not even there anymore, or this person's retired, or actually Lucas isn't the right person, it's Ben. So again, you're validating this with your networking. And then you're also starting to capture, Sarah knows this person really well, and she mentioned she can introduce. So starting to connect the researching and the networking. From here, you want to make sure to work backwards in terms of all of this stuff's in Crunchbase or PitchBook too, of when was the last time this fund raised capital, at what amount, and how many investments have they made during that period. Then we're going to tier them, which I'll get to later. Tier 1 is like your dream VCs. Tier 2 is like, these are really good firms. Tier 3 is they're kind of on the fringe. They maybe mostly follow. And then anyone that's not at tier 3 or above, I might not include them in my list, but okay, we'll come back to this stuff. Okay, so now you have your target list. And again, you're doing all these things at the same time. You're networking, validating your research, researching, and then validating it against your network. Looping the universe. So now you have an activated network, a list of all potential VC targets, potentially some incentivized supporters. Now you're going to put these things together. So again, IDing connection strength across your network into these VCs, validating your assumptions about what you've learned from the network. And then you're going to activate them, but only when you're ready to go. Okay, so you activate them when everyone's at the same stage and you're ready to kick things off, and you try to bring in 50 different meetings within a 2-week span. Okay, so you got to be prepared before you start. You don't want to take one at a time. Again, timeline is the most important thing. So again, go back to this list or this resource I shared about the calendar. We're here in the universe identification stage. And then you want to finalize that list, and then you want to activate for, 2 to 3 weeks of these informal chats. Okay, sorry, my head is blocking it. All right. Okay, and then now that you know specifically who you're targeting and why you're targeting them, cold outreach is like so easy. So say you can't find any warm connections, I would again keep it really simple, short, specific, and casual when you're cold outreaching to partners. Where I've put bold lettering is where you can hyper personalize this information. So again, you're gonna say something super simple. Hey, I'm the CEO of this company. This is when we're founded. This is what we do. Here's a really useful analogy. So like for Adrian, who I just showed, I'd say we're like ClickUp, but for X, if you can make that analogy. Pick 3 to 4 metrics that you're super proud of. Okay, like most companies don't have every single metric they're proud of. Pick your favorites. This is how fast we're growing. This is how many companies we have. This is our NRRs. Like, there's a million different things you can list in here. Then I would add in, how you heard about them. I talked to Sarah. She mentioned how awesome it was to speak with you. I think you'd really understand what we do. You can include in your customer list maybe companies that Lightspeed Venture Partners has invested in previously that are now your customers. So again, you want to catch their eye of like these hyper specific things. Again, now that you know a lot about them. And from this, you're going to start to test the waters, right? So you're activating these warm intros, marrying that with the hyper-personalized cold outreach, setting up 2 to 3 weeks of these informal coffee chats, and you're gonna set them up to where you have your tier 3s first, then your tier 2s, and then ideally the last week is all your tier 1s. This will really help you get comfortable with your story, your pitch, and it'll help really make a razor's edge out of the way you talk about your company. This shouldn't be a pitch or a hard sell. You should be sharing your story, giving them confidence about you, bringing excitement, high energy, a vibe check between you and the partner, vision alignment, guidance. You're gathering some informal feedback. Again, you're keeping it really casual. Light qualification, which I'll talk about in a moment, and then most importantly is no kissing on the first date. So I would avoid giving them hard, specific details about your business until you're ready to actually go and fundraise. Right now, we're just considering gathering signal. And we're testing the waters to gather signal. So some notes on talking to VCs. It's super important to understand that it's a two-way street. They can say no to you, you can say no to them at the same time. And you want to save as much time as possible by only pursuing in-depth conversations with VCs who are a match to where you're at and what you're working on. So you're going to qualify them across problem expertise, stage match, capital capability, and then the overall process. Okay. Here's some example questions. So problem expertise. What do they know about you? What do they think about or understand about the market or industry? Do they know the problems? Maybe they've worked in it before. Do they understand the historical issues? Do they know who your competitors are? Have they looked at those other competitors? Have they passed on them? And then maybe their thesis on what kind of strategy would win in this market. So this will give you an understanding is if they actually have an understanding of what you're working on and why it's valuable. A lot of times VCs might not even understand there is a problem and that things don't work exactly how they would assume they work, which will make conveying the value of what you're working on even more difficult, right? So you want to start at least at point one. They understand the problem, they know it's a problem, and they maybe have a perspective on why they think you might have a disproportionate ability to win in this space. Secondly, again, stage match. What are their minimum qualifications or strike zones, right? So they're like, hey, at stage Series B, we look for companies that have a minimum 20 million ARR, and you're at 10 million ARR. I'm not saying you can't do it, but you're just not going to probably be able to do it with that firm. Okay, so if they have these hard strike zones, ARR, NRR, GRR, burn profile, year growth, whatever it might be, and you don't fit in those, I would probably not confirm or deny that we're not there yet, but, I'd say, hey, we're probably there soon. Maybe this is a conversation we'll pick up later when we hit 50 million ARR or whatever it is. So don't waste time with people who you're not even in their strike zone with. Capital capability, I mentioned this for a second before. Some VCs will talk to you when they don't even have money to invest. Maybe they've written all the checks from their last fund and they're raising a current fund, so they couldn't write a check to you even if they loved you. So try to qualify on the last time they raised capital. How many investments did they make a year, and what's their average check size? And you can work backwards to if they have any money in their fund. Do they have lead requirements? Can they lead around? Do they prefer to follow? I'll talk about that more in a different module about round composition. Where are they in the investment stage, seed, early, late growth? How many investments have they made recently? And then, again, what's their preferred check size? If you're looking for a $10 million check and their maximum is 5, or say their minimum is 50, then you don't fall within that range, and you might as well say, thanks, we'll talk to you later when we're at a different stage or size. And then lastly, what's the overall process? How long does this take? Do you need all the partners to agree? Is there a certain date and time at which we need to have everything done? There's all kinds of aspects to making sure your timeline aligns into what they need to make a decision. Okay, if you try to force, if they need 6 months and you say, I need to get this done in 2, who are you fooling, right? You need to make sure that you have an understanding of when and how they do things to be able to work backwards and get them into the process, right? Or disqualify them appropriately. And then lastly, these things change quickly. A firm's focus, strategy, check size, minimums, whatever it might be, it can change, within a quarter. So if you haven't talked to a firm in 6 months, I always requalify. And this can take 5 minutes. Hey, last time we talked, this was your minimum check size. This was your lead follow requirement. Are these things still standard? Is there any differences in your strike zone? That type of stuff. And just update your notes as you're going, okay? Okay, and then I think this is one of the last points on talking to VCs. So now we know how to keep it casual, get the vibe check, qualify them, the hook. You're not just selling that partner. This is something I see founders screw up all the time. You need to arm them to go and not only be excited about you, but go and be excited about you on your behalf to everyone else in the firm. And if you don't arm them with a simple, we are X, for Y, solving for Z, the chances of them screwing up your positioning is like super high, right? So in these first 1 to 2 conversations, the goal is to engrave a simple hook in their mind. Even if they deeply understand your problem, the chances of their counterparts, the other partners, the associates, everyone within that organization, some of these VC firms are hundreds of people. The other people within that firm might have no idea about what you're doing, right? So you need to arm them with something to take and sell on your behalf. And this can look like a recognizable hot company analogy, right? These are super powerful, especially ones from their portfolio. So again, back to Adrian. We are ClickUp for X, right? So he already understands ClickUp. Everyone at Lightspeed understands ClickUp. They love ClickUp because it's a huge company. It's pre-IPO. They're going to do really well, all that great stuff. So it takes explaining what you do down to 2 seconds. It arms them with a powerful and memorable analogy. And it's a simple hook to where they go and talk about you internally. It takes explaining what you do down to 2 seconds. Okay, so think about how to find a simple analogy that maybe you can change between different firms. Okay, and lastly, in these early conversations, keep it brief. Okay, gotta go, right? And after the qualification, getting them excited, maybe a 5-minute high-level vision, and then you gotta cut the call short. You gotta go to the meeting. Don't run over. Keep it really brief. Keep it in chasing. Get them to do work. Control the power dynamic by putting them on their back heel. Reduce the surface of no's. The more information you give them from the first conversation you have, the higher likelihood they're going to say no. So reduce that surface down to just what they need to know. You're maybe not even really looking to raise. You're trying to get feedback, trying to understand the market. Here's what we do, the quick vision. Here's a memorable hook. Gotta go. Okay? So you want them to be wanting this next meeting. Sorry, again, a lot of talking. Lastly, go or no go. This is your last chance to turn back, right? You're not actually fundraising yet. The goal through, the first module and this module is you're converting these informal conversations into, I want to learn more. You want 20 plus firms all moving at the same time, qualified, interested, right? So you need to have a lot of conversations. It's okay. If you talk to 100 firms, only 20 want to move forward. That's great, right? You got to get a lot of people in the process at the top of the funnel. Some small checks from advisors are maybe coming in, or this networkers may be coming in. And then you've got a ton of information on the current market, your materials, your metrics, where you're at, all this stuff. So you've got tons of beta on what's going on, and then maybe some deal heat starting to happen. But again, you haven't actually started fundraising yet. This is your last chance to pull out without causing future issues. So maybe if you haven't received any interest at this point, and you've done all these steps, and you've met all these people and done all this research, you're probably not venture fundable. You're probably too early, or you're not positioning your company correctly, right? There's a multitude of different factors, but I would strongly suggest pulling out, regrouping, reevaluating your options, pivoting or bootstrapping until you hit those next major milestones that everyone is telling you about, okay? Trying to force a fundraise at this point from your network and these VCs you've had these conversations with and no one's interested yet, you will fail 100%. And once one firm tells you no, they all talk, right? So you got to keep them moving at the same time, keep them all interested, and you got to create this deal heat, right? So again, signal. If nobody's interested, that's a negative signal. Pull out. You haven't actually started fundraising. Go back to market when you've corrected these issues. Okay, next up. Next module, we're going to talk about finalizing materials. We're going to talk a little bit about decks, data rooms, evaluations, and some of the different frameworks I've referenced here to make sure that when you are going to market, you look professional, prepared, and when you get to the diligence phase, you're not getting caught up on things that take a long time to close a round, which can kill you. Okay. So thank you. If you stuck with me again, I really appreciate it. I think if you utilize some of these tools, strategies, or lessons, like, you're going to be in such a better place to try to raise and close a round. I do this for free. I don't make any money from this. I appreciate a like, follow, comment, share, whatever is useful. It's really, really deeply appreciated. You can follow me on X, find me on LinkedIn, or watch any of these on YouTube. So thank you so much, and looking forward to the next one. Good luck out there.